Please confirm if the audio and video and the screen is properly visible and clear everything. Great, great. Now let's start our session. In the last class, we discussed about the orientation of financial reporting course. Basically, we discussed the exam pattern, the paper pattern, the course structure, the success formula, and how we'll go ahead in the classes, the block division of the blocks, right? And then we started with the non-current assets. In the non-current assets, we studied few things like what is the meaning of non-current asset, and what are the types of non-current assets. What is the classification difference between property, plant, and equipment and investment property, right? And we also started with the initial recognition of a property, plant, and equipment. Tell me, any queries so far? Any queries so far? What is annuity factor? Okay. Shivam, tell me, do you know what is time value of money? Shivam? No. Okay. Now tell me, Shivam, that if I give you an option that I can give you 100 rupees now, or I give you 100 rupees after 2 years, which option will you take? Tell me. Now, why? Provided I am guaranteeing you, I'll pay after 2 years. There's no credit risk that I'll not pay. You can buy more goods. Why you can buy more goods? Basically, the value of 200 rupees, 100 rupees now is more than the value of 100 rupees after 1 year or 2 year, right? Why? Because what will happen? 100 rupees, if you get now, you can invest it and earn interest for the 2 years, right? That's called time value of money. That's called time value of money. Now, if you are getting 100 rupees after 2 years, if you are getting 100 rupees after 2 years, you have to the value now, the value of that now will be equal to 100, less than 100, or more than 100. Tell me, Shivam. Less than. Very good. Now, so what you have to do, that is called the present value. That is called the present value. That is called the present value. And now, if you have, there is a series of future payments. There is a series of future payments for which you have to calculate the present value. For which you have to calculate the present value. The present value factor is called annuity factor. Present value factor is called annuity factor. Okay. Just to give an example, let's suppose you will receive an amount here, 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 and you will receive an amount here. But you have to record this transaction as on this date. As on this date, right? So what you will do is right, what you will do is basically you will calculate the present value, you will calculate the present value, you will calculate the present value, right? Now, so the amount is, let's suppose, same x, amount is, let's suppose, x, same, right? So what you will do, the present value factor is called the annuity factor. The present value factor is called the annuity factor, and I discussed in the last class how to calculate the annuity factor, right? Is it clear now, Shivam? Okay, fair enough. Anyone else has any queries? Those who didn't had GT in their calculator, they have placed the order for calculators. Come on, guys, answer. Why you are so low on energy? Come on, guys, cheer up. All clear, Sahil? Okay. Subham, all clear. Okay. Khushbu, all clear. Okay, fair enough. Now let's move ahead. Let's move ahead. Okay. Now, what was the point number of last class? Last point which I discussed in the class for this one. Just let me check. 3. Measurement principle is 3. So we'll continue with the measurement principle. Measurement principle continue. Now, in the measurement principle, we were discussing that there are two things which you have to study in measurement principle. One is initial measurement. Initial measurement. And another is subsequent measurement. Subsequent measurement. Now, subsequent measurement will study later. Not now. Now we'll be studying initial measurement. So in initial measurement, what did we discuss in the last class? Tell me, what is the point that we discussed in initial measurement in the last class? Tell me. Come on, guys. Tell me, what is the amount at which the assets should be recognized initially? Why is everyone silent? It is at purchase price. Purchase price minus any trade discount or rebate. Minus any trade discount or rebates. Right? Plus any non-refundable taxes. Non-attributable cost, Uday. Guys, you have not revised. I can guaranteedly say you have not revised it. Uday, did you revise the concepts? Very good, Sahil. Okay. Plus any directly attributable costs. Guys, just one request, guys. One request to all of you. Please, no one should send a direct message here in the Zoom. Okay. It should be to everyone because I want everyone to see the messages and understand from each other. Okay. Please, I request it. Any directly attributable costs. Any directly attributable costs incurred to bring the asset in the location or condition intended by management, right? I don't need to write fully here. Okay. Is that clear, everyone? The initial measurement. Is it clear, everyone? Now, few things which you have to study for the cost from the cost perspective. Like one is you can say employee costs. Employee costs. Now, employee costs can be of two types. I give example, Uday. I will give you example. Okay. Employee costs can be of two types. Okay. Type number one is wages or salary paid. Now, let's suppose I am getting the asset internally constructed. Okay. And the persons who are working on the assets, I'll pay wages to them, I'll pay salary to them. Tell me yes or no? Right? So those wages or salaries paid, okay, those wages or salaries paid, okay, to you can say for internal construction. For internal construction, this will be capitalized. This will be capitalized. And this is example of any other directly attributable cost. Any cost which is directly related to this construction or purchase. Right? Now, Tell me guys, is it clear? The wages or salary paid for employee, is it clear everyone? Is it clear everyone? Now, another example in employee cost only. Employee training costs. Employee training cost. Now, what does this mean? What does this mean? Let's suppose I purchased a new software. Okay, my employees constructed and developed a new software. Okay, now I have to give training to my employees, all the employees, so how to use the software, right? I incur certain expenditure on that. Tell me, according to your knowledge, tell me, will we capitalize this cost or not? Will we capitalize this cost or not? Tell me. Yes. Okay. Very good. Now understand, guys, whenever you think I have to capitalize this cost, whenever you think I have to capitalize this cost, analyze two things. Does that satisfy the definition of property, plant, and equipment? Does the recognition principle get satisfied or not? Two things has to be satisfied: meaning of PPE and recognition principle. Now let's assess it out. Employee training cost. What is the meaning of PPE? Held for use, any assets held for use, any expenditure incurred which is held for use in the production or supply of goods or services, right? In the production or supply of goods or services, right? Life is more than 1 year. So employee training cost will definitely satisfy the meaning of property, plant, and equipment. Now let's analyze the capitalize the cost means okay. Now let's understand the meaning of capitalizing the cost as well. Guys, whenever you incur any expenses, whenever there is any outflow, whenever there is any outflow, okay, it can have two treatments. One, it will be treated as an expense in the P&L. It will be treated as an expense in the P&L, or it is recorded as an asset in the balance sheet. Okay. Whenever I say whenever I say expense of means transfer to P&L. Whenever I say capitalize means transfer to balance sheet, and record as an asset. Transfer to balance sheet and record as an asset. Is that clear, Safa? Now, employee training cost will be capitalized as in property, plant, and equipment or not? My question is, employee training cost will be recorded as in property, plant, and equipment or not? Now, let's assess it. So recognition principle is future economic benefits are probable and cost can be measured reliably. See, for employee training cost, the cost which you've incurred, definitely you can measure it reliably. But the question is, future economic benefits are probable. Now, let's suppose I have given I have definitely set of employees. Okay, I have given a training to them. I gave training on IFRS to them. Okay, to my employees. Tell me, is there any guarantee that my employees will stick to my company? Today I have given the training. Don't you think it is possible that they will resign from the job tomorrow itself? Tell me, guys. Right? So, is future economic benefits probable? No. There is a high uncertainty attached to it. Right? There is high uncertainty attached to it. Now, okay, Nandini, you are telling, but it is probable. Understood. But can you control it? Tell me, can you control it? Can you control it? No, you cannot control it, right? That's the reason why employee training cost will never be capitalized, will not be capitalized. So I'll write it like this. No, it will not be capitalized, but rather it will be expensed off to P&L. Expensed off to P&L. Is it clear, guys? Is it clear, everyone? Now, another thing, advertisement costs. Advertisement. The wages are also paid to employees. Yes, employees or laborers. Wages are paid to employees or laborers. Okay, it is also not guaranteed. Very good. Now, tell me, when do you pay the wages? When do you pay the wages? At month end, after the work is done. Means you have already got the benefits. You have already got the benefits. And then you are paying the amount. Understood, Nandini? And Khushi? Is it clear, Khushi? You have already got the benefits, right? So after that, you are paying the amount. So that's the reason why we are capitalizing it. Now, coming to the next point is advertisement costs. Now, same logic, apply the same logic what we have analyzed for employee costs and tell me, will we capitalize advertisement costs? Will we capitalize advertisement costs? Okay, let's suppose we have incurred advertisement costs. We have incurred advertisement costs. Can I bound my employees to? Can I bound the persons or the customers who have seen the advertisement to purchase the product from me? Let's suppose I am launching any course. I'm launching any course. Okay. Now I posted the advertisement everywhere. Okay, I posted the advertisement everywhere. Those who have seen the post, can I bound them? No, you have to purchase the course from me. No. Can I control the future economic benefits? No, I cannot control it, right? I cannot control it. Till the time there is no control, I cannot recognize it. So again, since there is no control, since no control cannot be capitalized. Cannot be capitalized. Hence, expense of to SPL. Is it clear, everyone? Is it clear, everyone? Now, third thing. SPL means profit and loss. SPL means profit and loss, Hepa. Okay. Now, another thing is testing costs. Same for insurance costs as well. We'll discuss everything. Don't you worry. Testing costs. Now, testing cost can be of two types. One is for the market survey. And another is for the inspection. Now, what is the difference between the both? Let's suppose I'll give you an example. Okay. Let's suppose I launched a product. I launched a course. Okay, on IFRS. I launched a course on IFRS. Okay, just for free on YouTube. Okay. Now, what happened when I launched the course? Definitely, I have a cost. I have a cost for me also. Like whenever I teach any classes, whenever I take any classes, there is a cost involved for me as well. Like there's an opportunity cost, right? If I'm teaching on YouTube, I definitely I'm not getting any money from that, right? Definitely I'm not getting any money from that. But in that time, if I've taught somewhere else, I'd have got the money, right? So there is an opportunity cost for me. Now, when I'm teaching on YouTube, that's so I am incurring any cost. Right? Basically, I am foregoing the revenue which would have came to me, right? So that's a cost for me. Now, the question is, can I capitalize that cost? Or will I send it to P&L? The answer is no, I will not be able to capitalize. Why? Because this expenses which I am doing is in the nature of market survey. I want to understand the requirements of the students. Right? This is in the nature of market survey, right? Or I want to understand how the students are liking my classes. they are liking my classes, or what is the feedback of the students, right? How can I improve myself, right? So this is the nature of market survey. Or to give another example, let's suppose entity, or like let's suppose Reliance has built an amusement park in Mumbai, let's suppose. Okay, they have built an amusement park. Now they want to test whether the amusement park that they have built is good or not, or whether what is the feedback of the general public, or how they can improve themselves, right? So they have launched it for free, like for 2-3 days. They have launched for free. Anyone can come use use the amusement park for recreational park and go. And there is no ticket for that. So definitely, but there is a cost involved, right? But, so the cost involved, can that be capitalized? The answer is no. It is in the nature of market survey. It is in the nature of market survey. There are no benefits from that. There are no economic benefits from that. Yes, definitely the cost can be measured reliably, but there is no economic benefits from that. Okay. Now coming to inspection. Now, what is the meaning of inspection? Let's suppose there are machines. If you go to any manufacturing plants or factories, before they purchase, whenever they purchase any new machine and put to use in the factory, before starting the work, they test it once whether everything is working effectively or not, so that any mishap is prevented, right? It prevents from any happening of any mishaps, right? So what happens? So that is inspection or testing is done. Now this cost will be capitalized. Why? Because if this testing is not done, the asset cannot be used. If this testing cannot be done, if this testing is not done, the asset cannot be used. But if this market survey is not done, it's not that the asset cannot be used. It can be used, right? It can be used. But if inspection is not done, it cannot be used. I give you one better example, like flights, airline industries, right? Whenever they start any purchase any Airbus, whenever they purchase any Airbus, before starting it for general public, they first inspect it, and inspection cost around 100-200 crores, right? Inspection cost around 100 or 200 crores. Tell me, do you think the flight will be operational for general public without inspecting it? Flight will be made available for general public without inspecting it? No, right? So this enables the asset to use. This inspection enables asset to be used, right? And hence the inspection costs will be capitalized. Inspection cost will be capitalized, but market survey will not capitalized. Market survey will not be capitalized. Is it clear, everyone? Is it clear, everyone? Now, what has happened from September 2022, a change has come up in this one. So it says the change says that whenever you are doing any inspection, okay, whenever you are doing any test run, okay, what happens? Let's suppose there is any factory, okay, there is any factory, and you purchase any new machinery and you did the test run. So when you do the test run, the products are manufactured. Now definitely you will not throw away these products, right? You will sell these products and generate revenue. Tell me yes or no? You will sell these products and generate revenue. Tell me guys, yes or no? Whenever you do the test run of any machinery, it might be possible that some products are manufactured. Some products are manufactured, right? So the products which are manufactured, will you throw it off? No. You will sell in the market, because these are like normal products. You will sell in the market, right? Right? I'll give you a very day-to-day life example. Have you seen okay, let's suppose if I'm taking any class for IFRS course, when I started teaching back, I think 3 years back when I started teaching. So in the first batch which I launched, okay, I was doing the recording. I'll tell you honestly things. I was doing the recording. just to see if my teaching is perfect or not. I will analyze myself. So that was a test for me. That was a test for me. Okay, I was just assessing where I can improve myself. Now, after the recordings were done, after the recordings were fully done, then I thought, no, this I have taught wonderfully in this one. Okay, definitely there were some improvement areas which I re-recorded it off. Now tell me, when the recordings are done, but these recordings were done as a test run because there were no students in the class. Okay, I was teaching like in front of the camera and I was teaching. Okay, now. So now in that case, the recordings which were done, will I throw it off or will I delete the recordings? No. If the recordings are in a proper manner, don't you think I'll save the recordings? I'll save the recordings. And if I sell the recording, I will generate revenue. I will generate revenue. Like similarly happening here also. Let's suppose I have purchased a machinery. I have purchased a machinery. Okay. Now, before putting the machinery to use, I will do the test run. Now, when I'm doing the test run, might be the case that some products are developed, right? Some products are developed or manufactured, basically, right? So the products which are manufactured, I'll not throw it off, right? I'll sell in the market and generate revenue. The question is, what is the treatment of revenue? What is the treatment of my question here is, what is the treatment of proceeds from sale of products manufactured while testing the assets. While testing the asset. So prior to September 2022, we used to say that this will be adjusted with the cost. This will be adjusted with the cost. Basically, we will reduce it from the cost price. We will reduce it from the cost of the asset. But September 2022, there is an amendment. There is an amendment which says that this has to be transferred to P&L. The proceeds has to be transferred to P&L. Is it clear, everyone? Is it clear, everyone? Is that clear, everyone, guys? Come on, tell me. Khushbu, what I'm trying to say here is, when you manufacture any product, as part of testing, when you're testing, it might be the case that you manufacture any product. So the product which you develop, you will definitely not throw it off or discard it off. You will sell in the market, generate revenue. Now the question is, what should be the treatment? What should be the treatment of proceeds which you will receive, or the revenue which you will receive from the selling the product which you have manufactured while testing the asset? The answer to that is, you will transfer that proceeds to P&L. You will transfer that proceeds to P&L as income. You transfer that proceeds to P&L as income. Is it clear now, Khushbu? Prior to September 2022, that is till June 2022, we used to adjust it with the cost of the asset. But you don't need to remember that now. Forget that. Just remember this one, that the proceeds will be transferred to P&L as income. P&L as income. I hope it is clear to everyone so far. Fair enough. Fair enough. Now, so that's all about your initial measurement. Tell me any queries in initial measurement. Any queries in initial measurement? Anyone has any queries in initial measurement? In the last class, I was discussing two more things, I believe. Asset percentage, deferred credit terms, yeah. Which part you want me to repeat, Safa? Sale of product. Can you please do one thing, Safa? Just read this line once. Just read this highlighted line once, please. Please at least read once. Done? Yes, Uday, tell me. Yes, cash discount won't be adjusted. Here I told. Reason. Okay. Understood. Let me explain that reason. So Uday has a query, and that's a very valid query. That's a good question. Okay. The question is, I said that discount are of two types. Discount are of two types. One is trade discount. One is trade discount, and another is cash discount. Okay, and I said that only trade discount will be adjusted. This will be adjusted with cost. And cash discount will be P&L expense. Now, understand the reason behind the both. Trade discount. What is the meaning of trade discount? Tell me Uday. Tell me Uday, what is the meaning of trade discount? Discount given to promote the trade. To promote the trade, right? To promote the trade, right? Now, what is the meaning of cash discount? Tell me, what is the meaning of cash discount? Discount given to recover the amount early. Agree? Uday? Discount given to recover the amount early, right? Now, if you see any invoice, there will be no cash discount. You cannot see in the invoice. You will never see cash discount in the invoice. You will never see cash discount in the invoice. You will never see that, right? You can see only trade discount. Why? Because trade discount is the actual discount that you give. Trade discount is an actual discount that you give, right? But cash discount is not an actual discount. This is just a sort of, you can say, a interest. This is just, you can say, a interest loss of interest that you are giving. Okay, so that you will recover the amount early. Why? Let's suppose if you will recover the amount later on, you will lose interest. You will lose interest, right? You will lose interest. Plus, you have a credit risk as well. Think logically, all of you. Let's suppose I have sold a product to you. Let's suppose I have sold. Okay, you have purchased my course. Okay. Now, you are supposed to pay me some amount, right? How much have you paid for FR course? Tell me, guys. Uday, how much have you paid for FR course? Tell me. Okay, no worries. Let's suppose you have paid 17,000. Okay. Now, let's suppose you didn't pay the amount now. You don't pay the amount now. Okay. You didn't pay the amount now. Okay. Now what happens if you don't pay the amount now? If you don't pay the amount now, and you say that, sir, I'll pay after 3 months. I'll pay after 3 months. You know what I'll say? I'll give you a discount paid now. Early bird discount. I'll give you a discount paid now. Right? Now why? Why? Because I know if I defer the payment, there is two risks. One, interest loss, another credit risk. So at least I can avoid the credit risk. And for interest risk, see, if you pay the amount after 3 months, definitely if I receive the amount now, I can invest and earn interest. On that, right? So there is a loss of that one. Right? So now what I'll do, I'll give you a discount. And recover the amount now. Right? So whatever is the interest that I would have earned, I'm giving that as a discount to you guys, right? So that's how it has to be done. Now what happens? Now what happens is, if I'm giving a trade discount, that is in the nature of promoting my trade, okay? And if I'm giving a cash discount, that is given to receive the amount early, right? That is given to receive the amount early. Now, if I'm giving a cash discount, do I have any future economic benefits? No, I don't have any future economic benefits. But if I'm giving a trade discount, tell me, do I have any future economic benefits? Yes, my business will increase. My business will increase, right? So that's the reason trade discount I adjust with the cost, but cash discount I send it to P&L. Do you agree with me? Is it clear, Uday, now? Uday, is it clear? Fair enough. Now, initial measurement, anyone has any queries so far? Initial measurement. Let me see if we have any good question on this one. We used to capitalize inspection cost over the years. What does it mean, Sahid? We used to capitalize inspection cost over the years means? No, you are telling we used to depreciate the inspection cost over years. Yes. So first we capitalize it now, and we'll depreciate it over the years, over the life of the asset. We'll depreciate it over the life of the asset. Okay. There is one exception to that rule as well, which I will discuss in the class. Okay. Let me see if we have any good question. For initial measurement, there are no questions. Let me start subsequent measurement. Guys, tell me, can I start with subsequent measurement? Can I start with subsequent measurement now? Okay, fair enough. Let me start that. So point number 3, I start with point number 4. Point number 4. Guys, tell me in non-current sets, which non-current set are we discussing today? Which non-current set are we discussing today? Tell me. Is it property, plant, equipment, or investment property? Which one? Good. Property, plant, equipment. Subsequent measurement. Of property, plant, and equipment. Okay. Because many times what I've seen is the student understand the topic, but later on they forget which topic they are studying. So I have to keep on reminding them. Now, subsequent measurement. Okay. Now for subsequent measurement, that can be done in 2 ways. Our standard says there are 2 ways of measuring it. First is cost model. Another is revaluation model. Cost model and revaluation model. Now, what is the meaning of this? What is the meaning of this one? Guys, understand that whenever you purchase any property, plant, and equipment, okay. Now you can keep it at cost over the life of the asset. Generally, we record it at cost. But now, see, there might be instances for an assets that you want to record the fair value. Let's suppose, what is the difference between cost and fair value? Anyone knows the difference between cost and fair value? All right, change the name here so that you guys better understand. Fair value model. Cost is the purchase price. Fair value is the current market price. Okay, current market price adjusted with the changes in the asset. Okay, now definitely. Now understood. Very good. Very good. Now let me tell you. Let's suppose you have two options. You guys have two options. Option number one. Let's suppose you purchased a building. Okay, let's suppose I have purchased this studio. Let's suppose I have purchased this studio. Now I purchased this studio for, let's suppose, rupees 1 lakh. For rupees 1 lakh. Now the life of the studio is let's suppose 10 years. Now I do have two options. Option number one, I will record the studio at cost. Now what I will do is every year I will depreciate the studio and record at the carrying amount. So what will happen at the end of first year? At the end of first year, what is the depreciation amount? 1 lakh divided by 10 years is 10,000, right? So the what is the carrying amount? Remaining amount is 90,000. So at the end of first year, the value of my studio is 90,000. At the end of second year, the value of my studio is 80,000. At the end of third year, the value of my studio is 70,000. So on and so forth. Now, what will happen in the fair value model? What will happen in fair value model? Now, at the end of first year, what is my value? What is the carrying amount? 90,000. Now, I'll see, oh, the carrying amount is 90,000. The cost is 90,000 of this studio. But if I will purchase the studio of this type again today, it will cost me 96,000. So 96,000 is the fair value. Now I want to select. Now I have to select whether I want to record at 90,000 or I want to record at 96,000. If I want to record at 90,000, that's my cost model. If I want to record at 96,000, that's fair value model. That's fair value model. Guys, tell me, is it clear to you guys? The meaning of the two model? The meaning of the two model, is it clear, everyone? Okay, now let's understand about the model. Okay, how will I record in both the models? Now in cost model, what I do is I will record at original cost minus depreciation, or I can say accumulated depreciation. Now what is the meaning of accumulated depreciation? Tell me guys, what is the meaning of accumulated depreciation? I believe you guys are already aware of the term accumulated depreciation. Total depreciation till that time. Very good. Okay. Now minus accumulated impairment loss. Few will understand what is an impairment loss. Few will not understand. If you are not understanding impairment loss, no worries. Ignore it for the time being. Ignore it for the time being. Okay. Ignore it for the time being. There is chapter specifically on impairment which you have to study. Okay. So for the time being, you can ignore impairment loss. Now, so that's how we record in cost model. It's very simple. That's very simple. Now comes the revaluation model. What do we do? What do we do? In revaluation model, we compare, or we can say we record, not compare, we record the asset at its fair value. At its fair value. Right? Now, how is the asset recorded? The asset is recorded at fair value of the asset, minus any subsequent depreciation minus any subsequent impairment loss. Okay. Okay. Definitely, I'll take up an example and explain it to you guys now. Okay. But okay, let me take up an example first and explain it to you guys so that you will understand it in a better manner. Okay. Now, let me take up an example. Example. A Limited purchased machinery, purchased building on 1 April 2021. A Limited purchased a building for dollar 1 million, 100,000. For dollar 100,000, okay, with a life of 5 years. The life of 5 years, okay. Now, so how the asset will be recorded under A, cost model, B, fair value model, if fair value on at end of year 2 is 75,000 and at end of year 4 is 35,000. Okay. Now, how will the asset be recorded? That's the question. Now, let's assess it. Let's see it. Okay. Is the question clear to all of you? Is the question clear to all of you? I've taken a very basic question just to explain you the meaning of the this one, the model, different models, right? The question should be clear to you. I think there's nothing specific in this question. Okay, now let's understand that cost model. Cost model. Now, in cost model, how will you record the asset? The life is 5 years. Life is 5 years, right? Now, if the life is 5 years and this is cost model, so what will you do is year end 1, year end 2, year end 3, year end 4, year end 5. Year end 5. Okay. Now, what is the cost? 100,000, right? Now, what is the depreciation? Tell me, what is the depreciation and what is the carrying amount? So, depreciation for this year is 20K. Depreciation for this year is 20K. Depreciation for this year is 20K. Depreciation for this year is again 20K. Depreciation for this year is again 20K. Right? Now, what is the carrying amount here at the end of first year? It's 80K. Is 60K. Is 40K. It's 20K. And it's nil. This is all your cost model. This is your cost model. This is your cost model. Now, if I have said what the accumulated depreciation, right? Accumulated depreciation, what does it mean? 20, 20, 40, right? 100 minus 40 is 60. 100 minus 60 is 40. 100 minus 80 is 20. 100 minus 100 is nil, right? So if I'm calculating on as an year end date, so what I'll do, I'll take this one and compare it with this one, right? Till this date, what is the amount of depreciation? So then comes the carrying amount. Is it clear? Is cost model clear to everyone? Tell me, is cost model clear to everyone? Is cost model clear to everyone? Now, coming on to revaluation, fair value model. Fair value model. This is also called as revaluation model. So, Smita, just see it once. You understand it. There's nothing for me to explain in this one. Just see the cost model once and tell me. If you still have any queries, I'll explain it all. from where you got 20K depreciation. Safa, understand what is the cost? 100,000. What is the life? 5 years. So cost by life is depreciation, right? 100,000 divided by 5 is 20,000. That's how we calculate depreciation, right? So Smita, is it clear to you? Okay, now let's understand the fair value model. Now tell me, what is the cost? 100K, right? 100K is the cost. Now, what is the carrying amount here? Carrying amount is 80K. The carrying amount ideally is 60K. The carrying amount ideally is 40K. The carrying amount ideally should be 20K. And the carrying amount ideally should be nil. Right? Ideally, this should be the case. But now, what does it say? Fair value at the end of year 2 is 75,000. Fair value. So it says the fair value is 75K. So what will you do? What will you do? You will record your asset at 75K now, right? So the remaining 15K, where you will transfer it to? You will transfer it to revaluation reserve. And now what is the journal entry for that? What is journal entry for that? The journal entry is asset account debit to revaluation reserve 15,000. Now with this one, the carrying amount is 75K now. The carrying amount is 75K now, right? Now what is the depreciation here? What is the depreciation here? 75K is the carrying amount. 75K is the carrying amount. And what is the depreciation for the remaining 3 years? It's 25K. It's 25K. It's 25K. I hope you have understood, everyone. Right? Now 75 minus 25. This should be now what? 50K. 50 minus 25K. This should be what? 25K. 25K minus 25K. This should be what? Nil. Is it clear so far? Now again there is a catch. There is one more adjustment. See, at the end of year 4, again the fair value changes. So at the end of year 4, what is the fair value? 35,000. So let me change my pen. Okay, now at the end of year 4, so this is year 1, year 2, year 3, year 4, year 5. So again here the fair value is 35K. So what is the difference? 10K. This 10K will be transferred where? Revaluation reserve. Right? Now what is the depreciation for this year? The depreciation will be 35K, and 35K minus 35K is nil. So this is what is called revaluation model. Subham, I have given already this in the question. The fair value is 75,000. See, I have given that as part of the question. So this is called revaluation model. Now, what are we doing in revaluation model? What are we doing in revaluation model? Apurva, 25K. See, at the end of year 2, what is the carrying amount? 75,000, right? What is the remaining life? 3 years. The remaining life is 3 years, right? So remaining life is 3 years. So 75,000 divided by 3 years is what? 25,000, right? What is the meaning of carrying amount? Carrying amount means the book value of the asset. Carrying amount means the book value of the asset, the value at which we are recording the asset. Why do we transfer to revaluation reserve? Okay. Now, okay, that's a good question. That why do we transfer to revaluation reserve? Okay. Now tell me, if this is a gain, you must think that okay, we should transfer it to P&L account. Yes, Prabhu, right? You must be thinking that this will be transferred to P&L account. Why we are transferring to revaluation reserve? That's the question, if I'm not wrong. Right? Now tell me, will we realize this gain today? Have we realized this gain today? Have we realized this gain today? No. Is it probable that we will realize this gain in the future? Or is it certain? Sorry, is it certain that we will realize this gain in the future? Is it certain? No. Is it probable? Yes. See, again, I say, have we realized it today? No. Is it certain that we will realize? No. Is it probable if we realize? Yes. So that's the reason why we are not transferring it to P&L. Okay, because if we transfer it to P&L, what will happen? It will lead to recording income which is not realized and which is not certain to be realized. And being conservative, we cannot record any income which is uncertain, right? We cannot record any income which is uncertain, right? And that's why we are recording is a revaluation reserve, which is forming part of the equity, or you can say which forms part of the shareholders funds. Okay, reserves and surplus. Is that clear, everyone? Prabhu, is it clear to you? Yes, we will start depreciating on fair value now. So is the fair value model clear to everyone? Now, what are we doing in fair value model? See here. So this is the at the year end 2. What is the fair value? I'll write it here. Just give me a minute, please. Okay. Now listen to me what I'm saying. Okay, at the end of year 2, the fair value is 75,000, right? Fair value 75,000. Okay. Now, what is the depreciation? Depreciation is 75,000 divided by remaining life, which is 3 years. That is 3 years, which is equals to 25,000, right? Now, what is the value or carrying amount at end of year 3? Now tell me, what did I say here? What did I say here? Fair value of the asset minus any subsequent depreciation minus any subsequent impairment loss, right? So I write that fair value of the asset minus any subsequent depreciation, any subsequent accumulated depreciation, right? Now, tell me, what is the fair value of the asset? 75,000. Minus what is the any subsequent depreciation? What is the meaning of any subsequent? Meaning after the date of fair value. After the date of fair value means 25,000. That is only and only for year 3, right? So which is equals to 50,000. Now, carrying amount at the end of year 4. What is the carrying amount at the end of year 4? Right? So 75,000 minus 25,000, that is year 3 and year 4. That is equals to 25,000 multiplied by 2. Right? That's the reason it comes to 25,000. Tell me, guys, are you understanding it now? Pramod, what's the query? Pramod, tell me your query. Carrying of 4 year 4. So what I've done here, see, fair value of the asset. What is the fair value? 70,000. What is the any subsequent accumulated depreciation? So after year, see, this 75,000 is at the end of year 2. Now you have to charge the depreciation for year 3 and year 4, right? Because see, this fair value of 70,000 is at the end of year number 2, and you have to arrive at the value of year 4. So what will you do? You will depreciate the asset for the 3rd year and for the 4th year. What is the depreciation for the 3rd year and 4th year? 25,000. multiply and 25,000, right? See, I have calculated here. Depreciation is 25,000 per year. Right here, per year. Right? So that's how it is to be done. Is it clear now, Pramod? Okay. Now carrying amount at the end of year 4. Okay. Now here only I write here what is the fair value. Fair value at end of year 4. At end of year 4 is what? 35,000. 35,000, right? So so what is difference? The hence 10,000 to be transferred to revaluation reserve. Revaluation reserve, right? We transfer to revaluation reserve. Is it clear, everyone? Now again, carrying amount at end of year 5 is equals to, again same thing you will write, fair value of the asset minus any subsequent accumulated depreciation. So what is the fair value of the asset? Tell me. What is the fair value of the asset? Tell me. 35,000. Very good. 35,000. Very good. The fair value is 35,000. 35,000. And what is the any subsequent depreciation? 35,000 divided by remaining life is 1 year. So this is fully depreciated. 35,000. That is nil. I hope it is clear to everyone now. Now, few important points related to fair value model. Fair value model. Few important points. Okay, let's understand what are the points. Let's understand that, guys. Okay. Revaluation, fair valuation is to be done once in 2 to 3 years, not every year. It will not be done every year. It will be done once in 2 to 3 years. Okay. Okay. However, if the asset is carrying amount is less than the fair value amount. That's what we discussed. I think your question is different, Vashu. Your question is if the fair value amount is less than the carrying amount. So rather, your question should be if the fair value amount is less than the carrying amount. Right? Vasu, can you please confirm the query that you have sent? I think your query is wrong because the query which you have sent is already discussed. Your query should be what if the fair value is less than the carrying amount? Right? So if in that case, what we'll record is we'll record a loss. Okay, we'll record a loss, and we will if we already have a revaluation, if we already have a revaluation reserve, we'll adjust with the revaluation reserve. If we don't have the revaluation reserve, we'll transfer it to P&L. Okay, we'll discuss that part as well. Okay, don't worry about that. We'll discuss that. Okay, now entity can okay, now one, yeah. See, you have to understand these 2 points for a fair value model. You have to understand these 2 points for fair value model. Now, fair value exercise is not to be done every year. No, it is not required to be done every year. It has to be done once in 2 to 3 years. Okay. But if the asset is of volatile nature, what is the meaning of asset is of volatile nature? Meaning thereby the fair value of the asset changes frequently. The fair value of the asset changes frequently. In that case, it can be done every year. Otherwise, not required to be done every year. Now, it says entity can elect cost model or fair value model for class of assets, for each class of assets. Now, what is the meaning of each class of assets? What is the meaning of class of assets and individual assets? You must understand, guys, that every entity has different class of assets. What are the class? Plant and machinery, furniture and fixtures, electrical equipment, right? Computer softwares, computer hardwares. All these are one class. All these are class. Like plant and machinery is one class. Building is one class, right? Furniture and fixture is one class. So now let's suppose building is one class. In that class, there can be, let's suppose, 10 buildings. There can be, let's suppose, 10 buildings. Now, if the entity has to apply revaluation model or fair value model, it has to apply to all the buildings. It cannot be the case that in the class of buildings, if there are 10 buildings, I will apply revaluation model to 2 of the buildings, and then for the remaining 8, I will apply cost model. No, that cannot be done. That cannot be done. That cannot be done. Okay. If I am applying a revaluation model, it will be applied to all the assets in that class. It will be applied to all the assets in that class, right? Now, it cannot be the case that if there is, let's suppose, there is a building and it has 10 buildings, I can apply revaluation model to 2 of the buildings, and for the remaining 8, I'll apply cost model. No, that cannot be done. Is it clear, everyone? Is it clear, everyone? Is it clear, everyone? Right now, how is class determined? How is class determined? So basically, class is determined on the basis of use of the asset. So I remember, I think 3 years back, a question came up in financial reporting exam. That I'll tell you the question. Let me see how many of you can say it correctly. The question said that the entity had 2 properties. One is industrial building and one is office building. Industrial building is located far away from the city, and office building is located within the city. Okay. Now, entity wants to apply revaluation model to the office building and wants to apply cost model to the industrial building. Can he do so? Tell me. Tell me, guys. Can that be done? Why? Why? Don't you think building is one of the class of asset? Building is one of the class of the asset. Why no? Can anyone tell me the reason why you think the entity can do that? But why they are not of the same class? Nayanika, why they are? Both of them are used for other purposes. Very good, Vasu. Very good, Vasu. Basically, the entity. So many of the students answered that yes, they can do so. Sorry, many of the students answered that no, they cannot do so. They cannot do so. Why? Because building is one of the class of the asset, and for each class of assets, one model can be used. Within one class, different assets will not have different models. Okay. So that's what is answered by a lot of the students. But that was wrong. But what you have to understand is, if there is a building, if there are buildings, multiple buildings, it can be the case that there are 3 class of assets, and all the 3 class there are buildings. But the building can be the class will be determined on the basis of the use. Industrial building is one of the class. Office building is one of the class, right? Like building given for rental to others is again one of the class. That is called as investment property, right? So for all the 3 class, 3 model can be used. 3 different models can be used, right? But in one class, different assets will have the same model. Different in one class, different assets will have the same model. So I explain to my students like this. Okay, let's suppose. Now, class is let's suppose industrial building, office building, class is plant and machinery, class is furniture. Okay, now industrial building number 1, industrial building number 2, industrial building number 3, industrial building number 4, office building number 1, office building number 2, office building number 3, plant and machinery PM1, PM2, PM3, PM4, furniture, furniture 1, furniture 2, furniture 3. Now let's suppose industrial building is at cost model. Is that revaluation model? Revaluation model. Is that cost model? Is that cost model? Now, if this is a cost model, what you have to understand is all of them will be at cost. All of them will be at cost. All of them will be at cost. All of them will be at fair value model. Right? So, but now this can be different. What you have to understand is this can be different. This can be different, right? Different class will have might have different model, but within a class, all the assets will be under one model. I hope it is clear to everyone. I hope it is clear to everyone. Okay, fair enough. Fair enough. Now let's take up a question. I think now we'll be able to solve a question. Guys, activity 1 is your assignment. That's nothing. That's a very easy question that you can solve, I think, on your own. Activity 1 is your assignment. Let's come to illustration number 1. Let me open the book here itself. Just give me a minute. I'll open the book in the screen itself. This is an illustration, activity 1, which is talking about depreciation, right? So I think you can do it off, right? So it says activity 1, if you can see the question, I'll just explain it. You guys can solve it off. Okay. A lorry bought for Titan company. The cost of the asset is 17,000. The life of the asset is 5 years and can be sold. That is the residual value is 2,000, right? So now straight line method. So what is the depreciation using straight line method? 17,000 is the cost minus scrap value is 2,000. So 15,000 divided by 5 years, right? So 15,000 divided by 5 is 3,000. Depreciation per year is 3,000. Reducing balance method. So how will you calculate it using reducing balance method? Right? So again, 17,000 multiplied by 35% every year you have to do. Right, guys? Now third is machine hour rate method. So 17,000 minus 2,000, 15,000, and this is the machine hour method. Machine hour days that is given, right? So what you have to do? 200 plus 100, 300, 300 plus 100 is 400, 400 plus 150 is 550, 550 plus 400 is 40 is 590. So 15,000 divided by 590, and every year how many days are used? You have to multiply that. I think that is very much doable. Activity 1. Can you do it? Guys, will you be able to do activity 1? Okay, fair enough. Now let me move further. Illustration number 1. Can you please try solving illustration number 1 now? Can you please try solving illustration number 1 now? That's an easy question. Yes, the question will mention the model. The question will mention the model. Either the question will mention the model, or the question will specifically say revaluation surplus. Something the question will indicate that will help you understand that okay, which model we have to use. The question will definitely give an indication, either directly or indirectly. Tell me what is journal entry for illustration number 1. What is journal entry? SPL to PL to revaluation surplus. Subham, first tell me what is the difference between SPL and P&L? First tell me what is the difference between SPL and P&L? Assets account debit to revaluation surplus 25,000. Okay. SPL is the carrying amount. When did I say SPL is the carrying amount? SPL means statement of profit and loss. Very good, Rakshit. Very good, Uday. Okay, let's discuss it all. So it says Binky company has a year end of 30th June 2023. Okay, let me draw it. Okay. Just give me a minute, please. Just give me a minute, please. No. Uh, if we work book, this is illustration 1, I believe, right? Illustration 1. Okay. No. Has a year end of 30th June 2023. So year end is 30th June X3. It purchased the asset on 1st July X2. Okay. What is the cost? What is the purchase price? See, it purchased the land at a cost of, okay, so purchase price is $120,000. $120,000 and incurred legal fees totaling to $5,000. Okay, now relating to the purchase during due to a surge in the land price in the year, the land has been independently assessed as having a fair value of 150,000. Okay, so it says the fair value here is $150,000. Now, tell me what is the price of the what is the cost of the land? What is the cost of the land? So the legal fees will form part of the other directly attributable costs, right? Any other directly attributable costs, the price will be the cost will be 125,000. Now tell me, will we depreciate the land? Do we depreciate land? No depreciation. No depreciation. Right. So what is the carrying amount of land? So the carrying amount is 125,000. Right. Carrying amount is 125,000. So what is the general entry here? The entry is land account debit. Land account debit to bank. How much? 125,000. 125,000. Right. Now, what you have to do? You will do is land account debit to revaluation reserve. To revaluation reserve. How much? 25,000. This is the entry which is required to be passed. Is it clear, everyone? Subham, is it clear to you? Subham, is it clear to you? You understood the entry which you have passed? Guys, again, I'm saying one more thing. SPL, whenever I say SPL, it means statement of profit and loss. SPL and P&L are the SPL is nothing but P and L. Okay, it's a professional way to say P and L. Is it clear, everyone? Is it clear, everyone, so far? Okay, let's take a break of 10 minutes and then we'll resume back. Okay. Come on, guys. I believe all of you are back from break. What is the point number that we will be discussing? What is the point number? Oh, subsequent measurement. This is point number 5. So now, Vasu, I'll be giving the answer to your query. That is treatment of revaluation gain or loss. So far, in the examples which you have taken, we only saw that there is a revaluation gain. But yes, Vasu, there can be a revaluation loss as well. So let's understand what is the treatment for that. What is the treatment for that? Okay. Now, it cannot be the case that every time we do fair valuation, there will be a gain only. No, it cannot be the case. There can be a gain, there can be a loss, it can be both. It can be both ways. Okay, it can be both ways. Now, treatment of revaluation gain or loss. We did a revaluation. We did a revaluation. Understand, this is an asset wise. This is asset wise. Asset wise. I'll explain what is the impact of the term asset wise. I'll definitely explain that to you guys, but just allow me some time. First, allow me to explain the meaning of everything, and then I'll discuss this as well. Okay, revaluation is done. Exactly, Vashu. But yes, we have to discuss this. This is one of the syllabus. Revaluation is done for the first time. Revaluation done for the first time. Then we can have. Two things. Revaluation gain, and we can have revaluation loss. If it is revaluation gain, definitely, as we already know, it will be transferred to revaluation surplus or revaluation reserve, as you can see, as you want to say. Okay, but if it is a revaluation loss for the first time, revaluation loss. Okay, we have done the revaluation for the first time, and it came revaluation loss. Where will we transfer? We transfer it to SPL. We'll transfer it to SPL. Okay, now subsequent revaluation. If we do subsequent revaluation, subsequently, there can be a revaluation gain, there can be a revaluation loss. Now, if there is a revaluation gain subsequently, again it will be transferred. Again, it will be transferred where? It will be transferred to revaluation surplus. But yes, if it first initially it was revaluation gain, and subsequently it is revaluation loss. Subsequently it is revaluation loss. So what will you do? You will adjust with revaluation surplus. Adjust with revaluation surplus, and any excess has to be transferred to any excess has to be transferred to SPL. Very good, Sahil. Any excess has to be transferred to SPL. Now, what about this one? Subsequently here. Subsequently. So first time we had a loss, but subsequently again we can have gain or we can have loss. See this, though I'm drawing a chart for this, but it is all depends upon logic. Totally, it's logic based, totally logic based. It can be revaluation gain subsequently and revaluation loss subsequently. Now, if it is a revaluation loss subsequently, then definitely again it will be transferred to SPL. But now, if it is a revaluation gain subsequently, then what will you do? You will transfer revaluation gain to SPL to the extent loss was transferred to SPL. Loss was transferred to SPL. Now, any excess should be transferred to revaluation surplus. Tell me guys, is that clear everyone? Tell me guys, is that clear everyone? Does that make sense everyone? It says that ideally you whatever revaluation gain or loss you have to transfer it to revaluation, you have to transfer it to revaluation reserve. Okay, now if first time only you had a loss, you don't have revaluation reserve only, where will you adjust? If you had loss for the first time, do you have revaluation reserve for that? Do you have revaluation reserve for that? Now you must be thinking you must have revaluation reserve for other assets. You cannot do that. You cannot adjust the revaluation loss of one asset with the revaluation gain of another asset. No, you cannot do the adjustment. That's the reason why I have written here asset wise. That's the reason why I have written here asset wise. Are you understanding the logic, guys? Are you understanding the logic? Is it clear, everyone? Come on, guys, please confirm. Is it clear, everyone? Okay, fair enough. Let me take up examples now so that it will give you better clarity. Examples. Okay. Now, first example. Example number one is okay. Revaluation gain for first time. For first time is let's suppose $100. Okay, $100. Now, second year, next is again revaluation. Okay, now tell me, where will this be transferred to? This 100 will be transferred where? Tell me. For the first time, you had a revaluation gain. You will transfer to revaluation surplus. Okay, now next time again you have a revaluation gain. Okay, revaluation gain of $35. So where will you transfer this to? Tell me. Again, revaluation surplus. Right now, again, next you had a revaluation loss of $90. Tell me what will you do with this one? Adjust with revaluation surplus, right? RRI, right? RR. Now, next again you have a revaluation loss of $35, not 35, 48. Tell me what will you do with this one? Adjust how much? adjust $45 with RR and $3 to SPL, right? Very good, Sahil, very good, Sahil, very good, Vashu. Now, next, again, you have a revaluation loss of $23. What will you do? Tell me. SPL. Now, next, again, you have a revaluation gain of $75. What will you tell me? RR, fully RR? Transfer, okay, recognize how much? Okay. 3 and 26 to SPL and 49 to RR. Are you understanding it, guys? I think I have covered everything in this example. Tell me yes or no. Now, just do one thing. Please look at this chart once. Okay, look at this chart once and tell me if everything is clear to you guys or not. Just spend 1 or 2 minutes time and in this chart. Okay, if you want, you can copy this chart in a notebook as well. It will give you better retention. In the first time loss, we used to transfer to other. Is there any amendment? First time loss, we used to transfer to in other comprehensive income. First time loss, no, there is no amendment. What? No, if it is first time loss, how can you transfer in other comprehensive income? See, revaluation reserve is nothing but other comprehensive income, right? Revaluation reserve is nothing but other comprehensive income. So if you have lost for the first time, is there a balance of revaluation reserve? No, you don't have a balance in revaluation reserve. So how will you transfer it to other comprehensive income? Safa, you are blank. Okay, I'll ensure you are not blank. Okay, just give me 5 minutes time. Now let me clear all these queries and then I'll discuss with you as well. Now, Sahil, are you understanding it? Is it clear to you, Sahil? Okay, now Subham, in the last example, why are we transferring 49 to RR? Okay, now tell me what is the total loss that we have transferred to SPL? Tell me, Subham, total loss that we have transferred to SPL. Tell me, Subham, 26. And now after that, what is the total gain? 75. So what I have said here, transfer revaluation gain to SPL to the extent loss was transferred to SPL, right? So what you have to do, you have to transfer this out of the $75 gain, you have to transfer 26 to P&L. Okay, 26 will transfer to P&L. What is remaining now? 75 minus 26 is 49, right? So the remaining any excess will transfer to revaluation surplus. Is it clear now, Subham? Subham, is it clear to you? Okay, now coming to Safa. Okay, now Safa, do one thing. Tell me one thing, Safa, that if there is a revaluation gain, where will we transfer it to? What we have discussed so far, tell me. If there is a revaluation gain, where will we transfer it to? Tell me. Revaluation surplus. Okay. Now, if there is a revaluation loss, what will we do with that? If there is a revaluation loss, we'll adjust with the revaluation surplus, right? We'll adjust with the revaluation surplus. Basically, we'll decrease the revaluation surplus, right? Now, think of it this way. We did revaluation for the first time. We did revaluation for the first time and we had a loss. How? See, if we have a revaluation surplus, we can decrease it. If we don't have a revaluation surplus, is there any possibility to decrease it? Is there any possibility to decrease it? No, right? So in that case, what will we do? In that case, what we will do? For the time being, we'll transfer it to P&L. For the time being, we'll transfer it to P&L. Now, next time, whenever we will have gain, we'll adjust it with the P&L first. Okay, it's like that. Let's suppose you have 100 rupees. Safa, you have 100 rupees. Okay, you want to purchase an ice cream, so you paid 30 rupees out of that and purchased it off. Okay, you purchase it off, so remaining is 70. So whenever you want to do any expense, you can do it from your pocket. But let's suppose you went to market, you want to buy an ice cream, but you don't have money. So what will you do? You will take a loan from your friend. But does that mean that you will not repay him back? You will repay him back, right, Safa? Tell me. Right, you will repay. So that's what. So you will repay him. First, you will take a loan. When you will have the money, you will repay him back. Same thing is happening here. First time, if we had a loss, there is no balance of revaluation reserve. So can we decrease it? No. If we don't have balance, how will I decrease it off? So what I'll do? I'll take a loan from SPL. Okay. First, I will transfer it to SPL for the time being. Okay. Now, subsequently, whenever I will have the revaluation gain, what I will do? I will repay it back to SPL first. And whatever is the remaining is mine. Now tell me, Safa, is it clear? Do one thing now, read this chart. Now. Read this chart and tell me, is it clear or not? First, read this chart and then refer my example. Everyone, all of you, please read the chart. This is very easy. The concept is, trust me, this concept is very, very, very easy. Okay, but yes, initially when you read it for the first time, it becomes confusing. Let me know once this chart is done, so that I can show you the example as well. Now you can read the example as well. And if you have any queries, do let me know. I'll discuss that query as well. Everyone, tell me, is it clear, everyone? Please confirm, guys. Okay. Safa, is it clear? Safa, is it clear to you? Some's not clear. Tell me which part is not clear to you. That's totally logic based. Revaluation loss of 90. Okay. Now see, you had a balance of how much? Tell me, in your pocket, you had a balance of 100. Then again, you got 35 rupees, $35. Okay. So in your pocket, you had 135. Now you want to purchase an ice cream of 90. What will you do? You will reduce from that, right? Now, so what is the balance remaining? You had 135, you spent 90. You have 45 still. You still have 45. So now you again want to buy an ice cream of 48. So what will you do? You will take a loan of 3 from your friend, right? Right? Again, you want to buy an ice cream of 23. So again, you already have taken a loan of 23 from your friend. Again, you will take a 23 rupees loan from your friend, right? So total loan is 26. Now you have a gain of 75. So what will you do when you will get a gain? You will first repay to your friend, and then whatever is remaining is yours. Tell me, is it clear now? Fair enough. Now, One more concept. What is also point number 5? Point number 6. Treatment of revaluation. Treatment of revaluation reserve. Treatment of revaluation reserve. Now, see, there are the standard gives us two options again. Guys, every now and then you must be seeing that the standard has given an option. Why? You must understand, guys, just going off the track, not required for the exams purpose, but you must understand this one. That see, there are two set of standards always. There are two set of standards. One is principles based and one is rules based. Okay, the IFRS that we study, the IFRS that we study, or in India the Ind AS that we study, or in India the accounting standard that we study, okay, is principles based. If I don't know if you have ever heard the name of US GAAP. How many of you have heard the name of US GAAP? No. So what happens is the accounting principles are different for different countries. Like in India, it's called Indian GAAP. For US, it's called US GAAP, right? So that's how it works. Okay. Now, so almost all the countries globally follow IFRS, either the wholly adopted IFRS or converged IFRS. In India, we don't adopt IFRS. We have not adopted IFRS. We have converged IFRS. What is the meaning of converged IFRS? Means there were few requirements in IFRS which was not applicable in Indian scenario. Okay, so we have removed that. Other than that, it's fully 100% copy. We study IFRS only in India as well. Okay, in India also IFRS is applicable apart from 6 differences. That's all. Apart from 6 differences. Okay, so globally IFRS is being followed, but US says that I will not follow IFRS. I follow my standards. So that is called US GAAP. GAAP means generally accepted accounting principles. Okay. Now, so IFRS is principles based. Okay, but US GAAP is rules based. What is the difference? Whenever any standard is principles based, they will give you a lot of options. You can do this, you can do this, you can do this, or you can do this. Okay, according to the situations which you are there, according to the situations which best fits you. Okay, you can apply the scenario, you can apply it. But what happens in a rule based? Whatever is the situation, I'm not worried about that. You have to follow only this. You have to follow only this. There is a specific set of rule that you have to follow, but that is not there in case of IFRS that we study. That's principles based. It will always give you options. It will always give you options. You can do this or you can do this, but this option is not there in case of US GAAP. Okay, just not required for exams, but yes, it is required for your understanding purposes, because when you clear your FR exam and you will work in corporates, it is much expected from you that you are aware of these basic concepts and terminologies. Now, coming back to the concept. Okay, treatment of revaluation reserve. It says that the entity has two options. Option number 1 and option number 2. Option 1 is this revaluation reserve will be transferred to retained earnings. Will be transferred to retained earnings. Okay, when at time of disposal of asset. When the asset is disposed of, whatever is the revaluation reserve, it will be transferred to retained earnings. Okay. Now, what is option number 2? What is option number 2? Option number 2 is revaluation reserve will be transferred to retained earnings. Will be transferred to retained earnings will be transferred to retained earnings. Okay, every year over the remaining useful life of the asset. Remaining useful life of asset. There is nothing for this to explain. There is nothing in this to explain. But yes, this is the treatment that is being followed. Tell me, is it clear, everyone? Guys, come on, tell me. Is it clear, everyone? Now, let me take up an example and explain it to you. Let me take up an example. Example. A Limited purchased an asset for $100,000. Okay, life is 5 years. Life is 5 years. At the end of first year, at the end of second year, the asset is revalued to $75,000. $75,000. Okay. Now, how the revaluation reserve will be treated under two options. Okay. Now, have you understood the question? Have you understood the question, guys? Now, let us discuss that. Cost is 100,000. So what is the depreciation per year? Tell me, what is the depreciation per year? What is the depreciation per year? Safa, you will tell me. No one else will tell me. Safa. Oh, others answered. No worries. Safa, okay, answered. Safa, you understood, right? Subham, you understood, right? Okay, fair enough. Now, what is the carrying amount? Tell me. No one will answer. I'll ask specific persons. Subham, you will tell me what is the carrying amount. At the end of year 2, what is the carrying amount? Subham, tell me. 80K at the end of second year, Subham. At the end of second year. 60K. Very good. Now, what is the fair value? Fair value is 75K. So, what is the amount of revaluation reserve? 15K. What is general entry here? General entry is asset account debit to revaluation reserve. To revaluation reserve 15K. 15K. Now, let us understand the treatment of revaluation reserve. Okay. Now, treatment under option number 1. Option 1. Option 1. Revaluation result will be is 15K here. It will be 15K here. It will be 15K here. And it will be transferred to RE here. It will be transferred to RE here. That is at the time of disposal of the asset. Option number 2. Option number 2. It was 15K here. It was 15K here. And now it is transferred to RE. Transferred to retained earnings over what is the remaining life? What is the remaining life? 3 years. So 15,000 divided by 3 is how much? Is 5K is transferred to RE. 5K is transferred to RE. Now what is the balance? What is the balance? 10K. What is the transfer? 5K is transferred to RE. What is the balance? 5K. What is the balance? 5K. What is transferred to RE? Again 5K. And what is the balance? Nil. Right? So this is the amount transferred to RE. Sorry. So this is the amount that is transferred to RE every year. So this is the option that is given. This is the second option. I believe all of you are clear on this one. I believe all of you are clear on this one. RE is transferred here. What little different, Safa? Tell me. Is it clear now? Option number 1 and option number 2 is clear to everyone? This is the only method. Yes. These two are the methods. Could you please repeat option number 2? Yes, I'll definitely repeat that if you want me to. Okay. Now see, here 15K arise, right? 15K arise. Now what we are doing every year. See, in this case, I'll discuss the journal entry. I'll discuss the journal entry. I think that will give you more clarity. So in this case, what I'll do is here I will transfer revaluation reserve account debit to retained earnings 15K. 15K. Now here what I'll do is at the end of third year, at year end 3, I will do what is revaluation reserve account debit to retained earnings. How much? 5K. At the end of year 4, at year end 4 again, I will transfer this revaluation reserve account debit to retained earnings 5K. Then again I will do at the end of year 5. At year end 5. At year end 5. Revaluation reserve account debit to retained earnings 5K. Is it clear? Sahil, is it clear to you now? Sahil, Safa? So option number 1 is at the time of disposal. At the time of disposal. Option number 2 is every year you will transfer. I hope it is clear, everyone. Transfer amount to RE will be 15K only. Now, so it's not about 15K only. I've taken this example according to this one. Whatever is the balance of RE at the time of disposal, whatever is the balance of RE at the time of disposal, you will transfer that to RE. Whatever is the amount of revaluation reserve at the time of disposal, whatever is the amount of revaluation reserve at the time of disposal, you will transfer that to RE. Okay? Is it clear, everyone? Now, assignments. You have to revise the notes. You have to revise the BPP workbook. Second, you have to solve activity 1. You have to solve illustration number 2. You have to solve activity with 2. You have to solve activity 3. That's all. That's all you have to do. Is it clear, everyone? Is it clear, everyone? Any queries that you want to discuss with me? Where we will we get BPP workbook? Have you not? You didn't purchase, Aman? You didn't purchase, Aman? You have Kaplan, but you need at least a reference for. You need to solve this assignments, right, Safa? I don't have any problem in whichever workbook you use, but at least you have to solve the assignments, right? Just arrange. You can contact VGLD team. They will definitely help you out with that. Okay. Thank you, guys. Thank you. That's all for the day. Thank you. Bye bye. Next class is on Saturday, and from next week itself, we'll start our extra classes. Sending these questions in WhatsApp group. Slot Sahil. I think you already have a BPP workbook, Sahil. Guys, if anyone has BPP workbook, can you please send? Can you please send this in the group? Anyone who has the BPP workbook? Yes, the lecture timing will be 2 to 5 from the next week itself again. And also from next week, we'll start one class extra per week as extra class. Okay, guys, anyone who has the BPP workbook, can you please send these questions? Not this one. You can revise my notes at sufficient. Activity 1, illustration 2, activity 2, and activity 3. Please send someone. Okay. That's all for the day, guys. I'll have to work out with that. So just give me some time. I'll definitely discuss in the WhatsApp group. Okay. Notes I'll share in the group. Thank you, guys. Bye bye.